Okay, let's unpack this. We're diving into some really interesting source material today, focusing in on a corner of the crypto market that's always moving. Bitcoin ETFs.
Right, and we've got this detailed news article here. It highlights a very specific and, well, timely development in that space.
And the big news we're really digging into is a planned move by a major player, the ARK 21Shares Bitcoin ETF, ticker ARKB.
They're planning a stock split.
Exactly. So our goal for this deep dive, and we're sticking only to the info in this article, is to figure out what this stock split actually means here.
Yeah, explore why ARKB might be doing it now of all times and what it maybe tells us about the current state of, Bitcoin ETF investing.
Basically, getting you quickly informed on a key market event.
Sounds good.
So let's start with the basics. The stock split itself. The article gives a pretty clear definition. What is it when an ETF splits its stock?
Well, simply put, it's when the issuer, in this case 21Shares and ARK, divides the existing shares into multiple new ones.
Like cutting a pizza into more slices.
Exactly like that. You still have the same amount of pizza overall, just, smaller pieces.
And for ARKB specifically, the plan is a 3-for-1 split. So one current share becomes 3 shares.
That's the plan. And the source gives us a date, too, June 16th, 2025, so it's looking ahead a bit.
June 16th, 2025, okay. And the article has a good example of the price impact, right? Like if it closed around $104.
Yeah, if it was, say, $104.25, a 3-for-1 split would bring that price per share down to just under $35.
Makes sense. Lower price per slice.
And this is crucial, and 21Shares emphasizes some things don't change. The ETF strategy tracking Bitcoin, still the same.
Okay.
The amount of actual Bitcoin the fund holds, unchanged. And the fund's total net asset value, the overall market value, also stays the same.
So you own more shares, but the total value of what you own is identical before and after.
Precisely.
All right, so if the total value is the same, why do it? What's the reason 21Shares gives for this split?
Their main stated reason is, and I'm quoting loosely here, to make shares more accessible to a broader base of investors and also enhance trading efficiency.
Accessible to a broader base. It really sounds like they're talking about retail investors, doesn't it?
It does seem that way. The idea being a lower share price feels more affordable. Maybe someone sees a $100 plus share and thinks it's a bit steep, even if they could just buy one.
Right, lowering that sort of psychological barrier to entry.
That seems to be the primary driver mentioned. The trading efficiency part is mentioned too, but the accessibility point feels like the main focus in how it's presented.
Okay, so let's put ARKB in context a bit more. It's a joint effort, yeah.
Yes, between 21Shares and ARK Invest. And it's definitely a significant fund. The article highlights it as the third largest U.S. spot Bitcoin ETF based on total inflows since these things launched.
How much are we talking in inflows?
About $2.37 billion. And its current size, its assets under management, or AUM, is around $4.8 billion.
Wow, okay. So nearly $5 billion AUM, $2.37 billion in total inflows. It's a big one. What about performance?
Year-to-date return mentioned is 7.35%.
7.35% YTD.
Right.
Respectable. But here's where it gets interesting, especially thinking about the timing of this split announcement. The article talks about recent performance in terms of flows.
Right, and this is where the narrative shifts a bit. Despite its size, the article notes ARKB has recently been the worst performing fund in terms of flows among all the U.S. spot Bitcoin ETFs.
Worst performing inflows.
Right.
So money leaving, not coming in. That sounds significant. How bad are we talking?
Well, the source mentions 6 straight trading days of outflows, adding up to $430 million.
$430 million out in just 6 days. Wow.
Yeah, and specifically on June 2nd, which the article focuses on, it saw $74 million leave just ARKB alone.
That's a considerable outflow. And wasn't there something else mentioned about ARK, the company itself?
Yes, that was interesting, and noted that ARK Invest, the partner, actually sold some of its own ARKB shares recently while it was buying shares of Coinbase.
Selling shares of your own partnered ETF while buying something else in the space. That adds another layer, doesn't it?
It certainly adds complexity to the flow picture for ARKB specifically.
Okay, so that's ARKB facing some outflow headwinds recently. But is this just an ARKB problem, or is something bigger happening? What about the whole group of U.S. spot Bitcoin ETFs?
Well, that's the really fascinating part. It's not just ARKB. The article states the aggregate trend across all these ETFs has flipped. After a long period of inflows, they've collectively seen a net outflow.
Collectively, how much are we talking?
$1.2 billion in aggregate net outflows over just the 3 trading days leading up to the article.
1.2 billion out across the board in 3 days. That's a huge swing from the inflow story we've been hearing.
It is, and the source links this directly to Bitcoin's price movement. These outflows apparently picked up speed as Bitcoin's price dipped about 4% on June 2nd.
Ah, okay. So price goes down, outflows accelerate. Makes you wonder how sensitive these flows are to short-term price swings.
Exactly. But the source adds some important nuance here, using data from Glassnode. They looked at the period just before this recent dip in outflow trend.
Okay, what did Glassnode find?
They reported that in the week prior to these outflows, there was actually a net inflow of over 6,100 Bitcoin into these ETFs.
So money was still coming in strongly right before this reversal.
Apparently so. It marked the 7th consecutive week of net inflows before things turned sour these last few days.
And did Glassnode have a take on what that meant?
They interpreted that prior trend as showing consistent demand despite cooling momentum, suggesting there was perhaps a solid base of demand building up, even if the upward trajectory was maybe slowing a bit before this recent price drop triggered the outflows.
Right. So putting it all together for you listening, we've seen why an ETF might do a stock split like ARKB seems mainly aimed at retail investors, lowering that per share price point.
We looked at ARKB's details, its large size, but also these recent, pretty significant outflows.
Then we saw that this wasn't just ARKB. The whole sector saw a sharp outflow trend recently, tied to a price dip.
But that recent trend came right after a period where data suggested underlying demand was actually quite consistent. It's complex.
Absolutely. And understanding these things, the why behind a split, the push and pull of these massive fund flows, it helps you see beyond just the daily price swings, right?
Definitely. It gives you insight into issuer strategies, investor behavior, how money is moving. It's not always a simple story.
So to recap, ARKB's 3-for-1 split is coming June 16th, 2025, seemingly to attract more retail investors by making shares look cheaper.
This is happening even though ARKB, despite its size, has seen major outflows lately alongside a broader trend of outflows across all U.S. spot Bitcoin ETFs.
Which itself followed a period of consistent inflows, highlighting how quickly sentiment, or at least flow direction, can change, often tied to price moves.
Which leaves us with a really interesting dynamic to think about, pulling directly from these themes in the source.
Yeah, what does it really signal when a fund manager makes a move clearly aimed at attracting new retail money?
Like this stock split.
At the exact same time that very large sums are actually leaving the fund and leaving the broader market segment too.
What does that tension suggest? Between a strategy seemingly focused on future retail growth and the current reality of significant outflows, potentially from larger players. Is it confidence? Is it something else?
Definitely something to keep mulling over as this market continues to evolve.